Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David and Glenn.
Good morning. Let's get to your top stories today. Stocks across the Asia Pacific. U.S. futures continue to remain under pressure, as you can see on your screens. It's after NVIDIA leads a Wall Street tech sell-off. A new survey finds China's equity rally is prompting money managers to turn less bearish.
Earnings season rolls on in China. Xiaomi announcing plans to sell its first EVs in Europe by 2027 after its China auto sales help offset slowing smartphone demand.
More on EVs ahead. We speak exclusively to Xpeng's Vice Chair and President Brian Gu about their latest results and also their expansion plan.
Plus, toy maker Mart posting robust revenue and profit growth thanks to the Labubu frenzy. We start with some breaking news when it comes to the LPR in China. So we're hearing from these commercial banks keeping those rates unchanged for the month of August. So the one-year LPR at 3%, that remains. 5-year loans, that's the one that's linked to mortgages as well. That also is starting at 3.5%. So there you go. No change there for a third straight month. Of course, you got to wonder are they pressured to act, the policymakers, given what we saw in that week credit data back and just recently here. But, maybe we'll have to wait until September possibly for any sort of movement on that.
A further deterioration maybe in the data, and of course, if we get a move on the MLF, then we probably get a move on the loan prime rates as well. So we can set that aside for now. This time, the next hour, though, we are likely going to see a change. And just to mention, one of the big things we're tracking, of course, is that RBZN rate decision coming through in the next hour, so we are expecting a cut there. All that said, the approach to that and the market open today, and of course, the interesting dynamics that we had overnight, where most stocks actually closed higher in the U.S. session. But of course, you had the big heavyweights and tech doing most, if not all, of the damage. So you get the Nikkei's down about 1.3, the Kospi tech AI heavy. You're also getting the TAIEX tech heavy as well. We're down about 1% on that. TSMC bottom of the screens down about 2. We were down over 3%, I believe, in the overnight session. Nasdaq futures are still extending the losses from overnight. A stronger dollar, broadly speaking, is what you see on your screens. Flip the boards as we look at some of the moves overnight. Xpeng, NEO, up, those two. But of course, we're looking at likely declines in the likes of Alibaba going into the open today because of the tech sell-off that we're looking at as well. Right, futures should be pointing down, coming up on your screens. There we go, a third of 1%. And of course, on the 30-year yield, I think we're about 4 basis points thereabouts there from hitting the high the high that we hit, I think, a couple of months ago. And we do have a 5-year bond auction to talk about. We can get to that later on.
Yeah, it's interesting, right? You talk about what really triggered this sell-off on the Nasdaq. It was the second worst decline we've seen since Liberation Day, essentially. And you got to wonder what really kind of triggered that, right? I think there was some talk about Sam Altman, what he said a few days ago about maybe an AI bubble is forming, perhaps why we saw such a steep sell-off in some of these names, and maybe just brings up the whole concentration risk once again in this U.S. rally. Yeah,
so that fell quite substantially. NVIDIA, you had Meta. Palantir, which has done phenomenally well, of course, has almost gone vertically, was also one of the big decliners overnight. But in fact, just on that very note, right, so we were talking about this, the points drags on the S&P, you could almost close your eyes and guess correctly which those were. But again, the breadth of the market overnight was actually quite good. 350 of the S&P 500 actually closed higher. So it was really the concentration on the tech space. S&P futures down, bottom of your screens. The other big theme, of course, is this Asia market and turnover, which has been just also punching through the ceiling.
It was above 2 trillion again, wasn't it?
Second straight day, I think 2.66, I think, is the average for Monday and Tuesday, which is probably a level we don't normally see as far as Asia market turnover is concerned.
Yeah, perhaps we'll see a bit of shelter then, maybe potentially, given what we're seeing broadly speaking in this Asia's tech sell-off. Can China continue to gain momentum here, given the liquidity, and it seems to be still quite intact, that story, and earnings as well? I mean, that's going to be a big mover here today, given what we saw overnight in the U.S. with some of these tech names.
Yeah, absolutely. Yeah. So we're going to look at the likes of Xiaomi and Xpeng later as well. And just to also mention, the Hibor is one thing we're tracking, and the reason we're bringing that up is because that is indicative of liquidity conditions, which might be in favor of the Asia market. Anyway, we can table those things for now, revisit that later on. But of course, the big story, of course, was what happened with tech overnight. And who better to talk us through the context there? Belle is here with us on set to take us through what exactly was behind the sell-off.
Well, I think you kind of mentioned it there with those Sam Altman comments, for instance. But I think overall, it's just that general concern you have that maybe it's this. I mean, it's sort of been a similar story that comes up every few months or so, but about going too far, too fast. Is it too much overhyped right now? And some of the stocks you mentioned, Palantir, that drop, I mean, it's one of the stocks that has seen the most short interest so far this year, I think only second to Meta. So it really just sort of tells that broader story. I think really what's going to be the key test, of course, and we're going to get it in a week, is the NVIDIA earnings, because they're confirmed for the 27th of this month. It will certainly be that big reaction that we get in the market. Is the sort of spending and the interest really justified right now?
It seems like when it comes to Intel, it's a different story. The bulls are finally being rewarded for their patience.
Yeah,
after
that's
the
it. I mean,
it's
been quite a stunning rally that we've seen even just this month. We're up around 30% for the stock. The catalyst, I mean, we've kind of telegraphed those pretty well, but it's the US government looking at taking that 10% equity stake. The other one as well, of course, is what was reported yesterday, that SoftBank is investing $2 billion. So it's sort of that vote of confidence in the company. You can see here, though, that even with that big rally, you're looking at valuations now that are at the highest going back to 2002. But the fundamentals for the business are very different, because you're at the start now of what could be a multi-year restructuring effort led by the new CEO, Lip-Bu Tan. Whether they can actually realise that, of course, we don't know just yet. And so analysts are sort of saying, look, it's really gone too far, too fast, really, the story we had for broader tech overnight, even though Intel bucked that. But of the analysts, for instance, that look at this stock, only 8% tracked by Bloomberg have got a buy rating right now. 80% are neutral instead.
Can I ask you about Meta? What happened there and the restructuring that they're looking at for their AI division?
Yeah, so this is sort of just a reflection. I mean, Meta, we know, and we've been also following this, just how many billions of dollars they've been spending on recruiting the top AI talent in the market. And so they're just sort of, this is what we understand, is it's more like trying to capitalize on that spending and make sure they're in the best position. So Alexander Wang, he's someone who's recently joined the business in a formal capacity. He's the head or the chief AI officer, and he sent out this internal memo overnight announcing the restructure. So there's 4 new business divisions for this. The first is that one that's going to be overseeing the large language models. You have the second one, which is sort of the ongoing, it's been around for a decade, but the internal AI research lab, that's going to be staying, but looking at longer term projects. The third business division will be looking at how to really capitalize that, put them into consumer products. And the fourth as well is looking at the AI infrastructure, all that expensive infrastructure that's needed to fuel the AI ambition. So not any headcount losses, but just a sort of restructuring, again, to try and make the most out of the spending they've had in this space.
All right, Belle, thank you. Belle there with an update on all things tech here this morning. Let's bring in Herald Vanderland, head of Asia-Pacific Equity Strategy at HSBC. You're starting to see this global equity rally, seeing some signs of strain. Is it just a symptom of slow summer or something worse?
A slow summer could be a reason for it, right? A lot of traders are off, and we know August, December are months where liquidity is a little bit less sometimes, but doesn't seem to be a problem at the moment. But maybe fewer people at the trading desk, and therefore you get sometimes.
There wasn't really any news, really. Yeah.
But I think sometimes this is the odd thing, and the difficulty, I guess, for you as well, is sometimes markets roll over on no particular news. It's just a gradual sort of process. I mean, a long time ago, we looked at why did in 2001, the tech bubble, it's a long time ago, why did it peak in March? And there was nothing that happened in March that caused it. It's a sort of market process that does it itself. And I think that's going on now. I mean, the S&P has rallied very strong, can't really come back since April, right? So positions probably got stretched. People said, well, let's take some of these positions off. And before you know that, a lot of people start to do that and the market rolls over.
And do you get a sense that this might continue short term? In other words, if nothing has changed fundamentally or structurally with any of the AI story, for example, is this a buying opportunity, or do I wait until maybe on the other side of the weekend after Jackson Hole?
Yeah, maybe. I think this can go over. If this is a sort of repositioning in the market, it might take a few weeks or something like that.
Okay.
But ultimately, if you look at the fundamentals, the earnings growth that comes from the US, but also interest rates. Interest rates, there's talk about them cutting, the Fed starting to cut. Maybe over Jackson Hole we get ideas of it, but normally that's not the stage where they really set interest rate policies. It's more broader, longer-term thinking there. But if we get an indication that they are more inclined to start cutting interest rates, yeah, that would be supportive again. But I suspect that will take a bit of time. So we'll be well into September then again.
What's positioning looking like to you in Asia right now?
So in Asia, it's a little bit what you spoke about in the US market. It looks like everybody's in the same corners. And we know it's semiconductors in Taiwan. Korea was underpositioned at the beginning of the year. A lot of people have now gone into Korea, into the DRAM names there. So we've actually, for example, downgraded Korea on the back of that because we felt that people were overly positioned there now. So it's everybody's in the same corner. So when you get a rush for the door, it's everybody rushes at the same time.
And do I differentiate between Korea and Taiwan?
I think a lot of people don't so much. Yes, there are different drivers in Korea and Taiwan, but ultimately it's the AI story. And companies like TSMC give you great exposure to that, but there's a limit to what you can own. Most funds own about 10% on average in an Asian portfolio in that particular company. You can't really own more because your risk managers say, hey, you're running a portfolio.
What are you doing?
What are you doing? It's basically one company here. You can't do that. So people have then started to look for other ideas that are mimicking that performance and also in the AI
trades. So difficult though with a stock
it's
that's
difficult.
40% of the index.
Yeah.
Exactly. So, but you can't buy more. So you need to do something. So what you then do is you buy something that is correlated with it, has a similar sort of dynamics, and you can find that in Korea as well. And I think that's one of the reasons why people have gone into Korea.
We've been talking about this earnings season. It seems like things are looking resilient so far. I mean, what's your take so far on how things have looked so far?
So far, it's good. It's early. So it's really next week when, particularly you guys, are going to be busy with lots and lots of results coming through. It's the last few days of the month when most key companies are coming through. But for example, this morning I was talking with Michelle, which is our real estate analyst, and she says, well, you know, for us it starts really on Friday, so we'll see what the numbers are. But she has the impression that the confidence that the companies have in the earnings that they're going to present, presumably some of them might know it already, but she says the confidence that they're talking about is something, she says, I haven't seen literally for 18 years, she said.
Wow.
So it's, last year, she says, people didn't want to talk about the numbers. It was like,
China property,
we don't know. China property is in this case.
Okay.
Sorry, yeah.
Okay, yes.
She says they didn't want to talk about it. But now she says they seem to be confident to give guidance. That's a very different sort of mood. And I think that we see this a little bit in other pockets in China as well. People feel there's a sense of confidence there. And the market is expressing that to a certain extent. Yeah.
Yeah. I mean, we have been hitting higher and higher lows, and we're certainly past peak pessimism, I think is the point that we were just making there. We'll have more with Herald van der Linde, of course, on this Chinese market in a moment here. Head of Asia-Pacific Equity Strategy at HSBC is staying with us. Still ahead here on shows, we'll dive into the latest earnings. Speaking of, with Xiaomi and also Mart, looking at a pop going into the open today. Plus, of course, Xpeng President Brian Gu will be joining us to talk us through their outlook, gross margins. They beat on almost every metric. Are they finally on track? There was a question to profitability. We'll ask that question, of course, to Brian Gu when he joins us later at those times on your screens. And yeah, we are counting down to the open of trade. Futures are pointing lower. Finally, I was going to say the sun is out, but at least there's no rain. We're halfway there, as Bon Jovi would like to say. There we go, 16 minutes away the opening. Well, this is the China Show.
Your agenda out of Greater China here today. We talked about that CGB auction coming up with a 30-year, and we're also, the 30-year levels, I should say, that we're watching. Turnover obviously has been quite hot as well. Still watching those CSI 300 levels there. 42.39 is sort of the level to watch here as well. Sectors include tech, solar, and steel and lithium. There was some news when it comes to tariffs there, when it comes to steel and lithium. Solar was also something that we heard here about solar stocks in particular that are in focus here from the government. So certainly one to watch in terms of sectors. That Hibor surge. Yeah, surge we're talking about in the last few days, so certainly one to watch. And Wang Yi now continuing his trip in India, but now coming next now to Pakistan.
Yeah, and of course there's a big earnings theme as well this Wednesday, and of course there's a big interview coming up, and you can stay tuned for that, of course, in one of the companies set to report, and maybe Yvonne can talk a little bit more about this. HKX is coming through with earnings today, and the reason I bring that up is because
Oh, Bonnie Chan's
Yes, there we go.
We're talking to Johnny Chan later on this afternoon. I mean, obviously, they're expecting a great set of earnings for the second quarter once again. Obviously, these southbound flows that benefit them very, very closely. They're going to talk about the IPO pipeline. I believe there's still more than 200 applications active right now that we could look ahead to as well. One thing to ask about is Hibor, which has actually potentially could hurt their investment income too.
Yeah, it's sort of funneled some money back into the Asia market, if you will. Looking at that. Okay, well, speaking of earnings, Xiaomi came out. The company's planning to sell its first EV. This is in Europe specifically by 2027, taking on Tesla and BYD globally with its year-old EV business. It's also reported about a 31% pop in quarterly sales. Let's bring in Danny Lee, our transports man of the hour, to talk us through what we know about these plans in Europe.
Yeah, I mean, this is the level of competition we are seeing. And now with Xiaomi having relatively good success in the China market in a short space of time, it now wants to take on Tesla and BYD on a different territory. And so by pushing more global, with its ambitions to go global, Europe is consistent with that message by 2027. And it's this $10 billion bet it has made to push into the EV industry. So with relative success over a small kind of set of models it has produced so far, it's gaining increased confidence. And you see that in the earnings, you see that in the earnings strength, and particularly at a time its main business is seeing a bit of a slowdown.
Xpeng, that was quite interesting, right? So you're talking about record sales, shrinking the losses, and margins were pretty solid as well. Is profitability in its sights now?
Well, this is something that I'm sure you guys will ask Brian Gu when you speak to him not too long from now. But I think just the way it's been able to narrow the losses and particularly really accelerate the level of sales it has seen coming from what previously was a difficult period. I think for Xpeng, there is a bit more of a kind of tailwind. Given the regulatory concerns across the wider industry, it is in a much better position than some of its peers. So I think the losses it has been making, it's only a matter of time before it starts turning into profitability.
Okay, Danny, thank you. Danny Lee there. We're expected to hear more from Brian Gu, of course, and we'll see how the stock reacts in the Hong Kong session here. But ADRs did jump on the back of that earnings report. We'll have more from Brian Gu, of course, in the EV landscape when we speak to him about their earnings outlook, global expansion plans, and, of course, what to do amidst this whole new pricing from Tesla that did move the market a few days ago. That's coming up at the China show at the Times on your screen, 10:30 a.m. Hong Kong time. Let's talk about PopMart now.
Yeah. Oh, no.
I mean,
I know where this is going.
Oh, he's got to talk about it, right? Huge numbers, right? So we're talking about huge revenue and profit growth, boosted, of course, by the global demand for its hugely popular Labubu doll. There's a lot of huges in one sentence. Let's bring in our China correspondent, Min Min Lo, to walk us through some of the key highlights from those results. Min Min.
Yes, traders had really sky-high expectations for the company, but PopMart not only met them but beaten them as well. We're talking about 400 or nearly 400% when it comes to net income, about 200% when it comes to revenue. And I think what really impresses me is when you look at the overseas expansion plans, right? Its expansion into US is about 1,100%. If you can show the chart of the regional expansion. In Europe, it was about 700%, and in China, it's about 130% or so. So huge expansion, especially in the Americas. And of course, I'll be attending the earnings call later today in about half an hour from now when the CEO Wang Ning will be speaking. He already previously had said he expects overseas sales to go beyond China sales this year. So investors will definitely be looking out for the profit guidance for the second half of the year, as well as whether the company can give us the longer term expansion and growth plans for the next 3 to 5 years. How are they going to keep this up sustainably, and whether there are any sort of IP creation, diversification plan, as well as the supply chain plans, given the strong demand overseas, as well as the tariff uncertainties.
And Min, I think one of the things we talked about before shows was how analysts had been struggling to keep up with the rally in the stock price. So currently, how much more upside on consensus is seen right now in the share price?
Yes, so according to what analysts are looking at in terms of price targets, currently Pop Mart is still trading at about 90% of the 12-month average in terms of analyst price targets. And if you look at this chart that you actually created, David, you can see that, over the past year or so, we can see, there is some quite a long period where there was a period when basically the traders were chasing this rally that we are seeing on Pop Mart. And starting from June, we start to see Pop Mart trading below that price to target ratio, and that is when Pop Mart had given out its preliminary earnings, and perhaps there's been a revision up in terms of the price targets from analysts. So yes, about 10% upside that we are seeing here, but some analysts are talking about certain downsides they're looking out for, and they're coming from a few places, right? One is if there is more regulatory scrutiny from China. There have been some, commentary from state media talking about this anti-addiction campaign for young adults who are buying into all these blind boxes. The second downside risk is if there is more competition from new emerging players, given that we already see a lot of counterfeit products out there that actually see pretty strong demand as well. And of course, the third one is whether or not the company is able to replicate the success of Labubu with its other new IPs as well. The Labubus, by the way, part of the Monster series, that really contributed to about a third of the company's revenue. It's up about 600% in the first half of the year.
Nightmares there. Min Min, thank you so much. Min Min Lo, of course, will be attending the call later on, and she'll be giving us an update there. Just a quick word on Labubu and earnings, and maybe this new consumption theme. Herald van der Linde is still here with us here on set from HSBC. What do you think about this? This new consumption favorites, whether that's cheap coffee, Labubu Gold. Is that a theme that resonates among global investors?
Yeah, first time I heard about Labubu, I'm not your traditional customer, I would say, for a Labubu. I don't have one. Yes, no.
Preaching to the choir.
So if I would be an analyst for this stock, I would really struggle. The sales are phenomenal. Look at these numbers, right? Yeah. And I guess there's an enormous reach for it. I was in London not too long ago and in Paris and saw people lining up for these products. So fast growth, interesting product. But yeah, you're right. We should put it in a bigger picture. Why is this happening? And our suspicion is that this is a sort of affordable luxury. We've come out of COVID. We've come out of a really difficult period. People have lost money. They want to feel good. And for a lot of people, it's
unboxing a blind box.
Exactly.
For a little bit of surprise.
Yeah, it's these sort of things. We see this in maybe some other products as well. Yeah. So it's a very affordable way of treating yourself.
Okay.
My colleague calls it the lipstick phenomena. She says it's in recessions, lipstick sales do relatively well because it's affordable luxury. Now, I'm not into lipstick either, but neither in Labubu.
All right. Well, okay. Harold, let's wait until we introduce you to our makeup people.
They might the new recession indicator.
They might change their mind, of course. Okay, a quick preview of markets coming up next. This is the China Show.
All right, this tech sell-off seems to be going a little bit more here in the Asia session. So we're watching some of these tech names like Xiaomi, that's down some 2%. That's despite what they said, right? Declaring this foray into Europe in 2027. Xpeng is certainly a good story there. We talked about those earnings as well. Pop Mart, though, that's the negative news story there. We're down about 2%. But despite those explosive numbers that we saw, but Wuxi was also a beat. So we'll see how the market open goes. You're watching the China Show. This is Bloomberg.
Good morning. Welcome to the program. And it's actually pretty quiet in the news front today. Perhaps why we are getting a repositioning out of some crowded trades. We're coming up the loan prime rates out of China, no change there. And top of the next hour will be, of course, the RBNZ. We are expecting a rate cut coming through there out of the RBNZ. And might that be the same story as far as the Fed conversation goes?
Yeah, as we count on to Jackson Hole, certainly still waiting, of course, whether Jay Powell does solidify those speculation out there of September cut. But yeah, that's still a few days away, right? Right now, as you mentioned, are we starting to see cracks or things awakening here in a slow summer? Or are we starting to see something a bit more sinister when it comes to this tech sell-off, right? given the fact that we saw these big mega cap names in the U.S. sell off for not really any big news in particular, right? So that's certainly one thing to watch here, whether we're seeing that play out through in Asia. You are seeing a little bit of that here in some of the greater China markets as well. So there you go. Onshore markets are doing this. We're down about 0.4% here right now. You're seeing a slight bid back into bonds. So a little bit of that rotation now that has reversed, right? Before it was taking money out of bonds into stocks. That's now going back to that now with your 30-year yield down some 2 basis points, but we're still well above that 2% threshold here right now for that 30-year yield. Commodities are selling off. We're watching, of course, some of these big names like Queichow, CATL A shares are down some 0.9% here. Medea Group is also down some 1%. So it seems like it's a pretty broad-based sort of sell-off here right now. Of course, it makes us focus on earnings a little bit. Maybe we'll see some more idiosyncratic moves here. But there you go. HS Tech is down some 1%. So it really is seeing the tech sell-off here spread to some of these China names. And Alibaba is down some 1%. Hong Kong Exchange, they come up with earnings later on. That's the next one to watch, though. But we're still expecting a pretty decent second quarter for them. And now that we're on track, it seems, for Hong Kong to be put the crown for the number one when it comes to the IPO markets, right? But yes, there you go. It's not looking too pretty here right now. Property is also on offer here. And we're watching some of these, earnings stories, right? PopMart was a phenomenal set of numbers when you talk about, sales actually tripled in the first 6 months of this year, but we're still seeing that stock down some 3%. Not sure if it's an earnings story or just overall tech. And, these big names that have actually led this rally are now seeing a bit of a pullback here. Wuxi Biologics, they also beat in their earnings as well. Xiaomi, this is the one to watch, right? So they're talking about entering into Europe, maybe possibly in 2027 to compete with the likes of BYD and they're in Europe. So certainly that's one thing to watch as well. Xpeng, though, it seems like me that we're starting to see that fourth quarter break-even target. Analysts are saying we're on course to hit that right now because you take about what the earnings did, operating losses narrowed. You talk about when it comes to gross margins, also were pretty solid as well. And they're seeing record sales. So maybe things are pointing higher for Xpeng as well. Solar stocks are watching very closely. This is a more anti-involution theme. We did hear from the government talking about they need to regulate competition more in this space. So some of these solar names are rallying this morning, Dave.
Yeah, and I think HSBC has some interesting thoughts on what this actually means, anti-involution as well, right? So speaking of just the latest survey here, we'll talk about the context of these numbers in a moment here, but the headline tells you everything you need to know. Less bearish on the Chinese market. Point number one. Point number two is when you flip the page, please, and have a look really at still overall allocations are generally about 340 basis points, I believe, underweight when you talk about that. Right. Now, where are we seeing the allocations come through as well? And I think even when you look at, say, southbound data across the Stock Connect, HKX website has that, of course, right? What are the top names that are sucking in all that money? You have the Tencents of the world. In this case, of course, based on a survey from HSBC, it's the three names you see here on your screen. So, yeah, there's a lot to talk about in the Chinese market. What really is, Yvonne, going on?
Yeah, so this is Herald van der Linde to answer that question, head of Asia-Pacific Equity Strategy at HSBC. Do you think that this equity rally in some ways is really at odds with what we're seeing in the economy in China right now? This divergence, do you think can continue?
I think it can continue. I think the ultimate driver here is not so much the economy, but it's actually a reallocation of money from households. Chinese households over the last 3 or 4 years haven't done anything with their money because they thought they would lose their job in Corona, in the COVID time. They thought if I put in property, I'm going to lose money as well. And I can't put in the stock market either. And prices were falling, deflation. So what do? What is the best way to do? You put it in the bank. You don't get a lot, maybe 2% or something, now even lower. But if prices are falling anyway, in real terms, you maybe make 3 or 4%. And that's safe. So that's what they've done. Now, Chinese are avid savers already, but over COVID, they have saved even more than what they normally do. So they're sitting now on $22 trillion of cash. That's the size of a couple of largest global asset managers together, right? And that's what they have in cash. A lot of that cash they will hold on to because that's for their retirement. So we think about $6 trillion of that is too much savings, about excess cash, excess savings. And they might start to feel more confident, as we saw with Labubu we just spoke about. They feel more confident to spend here and there. Maybe the property here and there does a little bit better. So gradually they're going to invest that. And that explains, I think, the strong southbound flow we've seen. So although southbound has been phenomenal this year, I think it's 110, 120 billion US dollars year to date. That is nothing compared to the $6 trillion that they might have at place. Not all of that will go into equities, but I think that ultimately is the driver. It's actually some sense of confidence. I don't say that people are confident, but they're less worried than 12 months ago.
Is that sticky money, though? Does that go out? I'm just playing the devil's advocate. Does that go out as quickly as it's come in?
Potentially, but Chinese households have too little equity in their portfolio. An average American household has 40%. In Europe, it's probably 30%. In Japan, it's over 20%. In China, it's 10-ish. So you could argue that they have too little equities anyway. So in that sense, it might be it might be more sticky. We'll have to find out over time. But good point.
Anti-evolution. We have to find out over time too if this works.
Yeah.
How does it work across markets? Do you think?
I think the focus is initially now on anti-evolution. I mean, you probably, when you saw the word for the first time,
like,
exactly, yeah. It's supply side 2.0. They did supply side reform 10 years ago. Now they're doing it again. But I actually think the way it will work is actually not only through supply side and industry consolidation, but it's through consumption. Because why they're doing this now? Because prices are falling, deflation. And why is that? We have oversupply in nearly every industry in China. So they're now trying to steer, or I wouldn't say regulate it, but steer it or massage it, if you want to put it like that, to create better, sort of healthier industry dynamics so you don't have deflation. Now, deflation, if you have a little bit of inflation, let's say that they get there, that changes consumption. If you think prices are falling, you want to buy a car, but next month is going to be cheaper, you're going to wait. And if then the month thereafter is cheaper, you say, well, let's wait another month. I don't need it yet. Because it makes sense for you to do so. But if you think prices are rising, you need to buy now. So that could change consumption in China quite importantly. And maybe actually the ultimate driver of this anti-involution policy is to bring consumption back and have China consume more. And in the bigger scheme of things, the geopolitics, that's something that they said that they would work on as well. So it might well play ultimately through the consumer sector. No?
Have you noticed any early indications that's showing up in earnings estimates?
Margins,
not in the numbers yet. We've looked at it, but not in the numbers yet. I think that is too early.
Okay.
But we will see news. I think you guys will be on top of it. First time that companies hearing about an M&A or that in an industry companies are raising prices. That sort of news flow, that's what I'm looking for, because that would tell me how maybe this is going to work into earnings. And if that then works out in earnings and profitability and companies are doing better with dividend payments as well, then you actually have a decent sort of earnings story supporting the Chinese market as well.
Has your team been able to sort out the winners and losers potentially out of this theme?
We're struggling really with that because it's so early stage that we look at all these different industries, but we say, are they going to do this or not? We don't know. It's not a clear-cut framework. It's more of, as I used the word massaging, right? Yeah. Policymakers say, well, you know, company A and company B, why don't you do this together? Why do you do an M&A? And stuff like that. So we'll have to see how that's going to work out. Probably on the supply side, it's going to be those industries that are really in massive oversupply. So you're talking some of the basic materials, where state-owned companies are prominent. Sort of, That's where you would expect things to move first, yeah.
And just your broad thoughts on the rally. It almost came out of nowhere, particularly in the Asia market, right?
Yeah.
So clearly there's liquidity that's a key part of the formula there. What's the best leading indicator, you think, now? What do I need to watch? Margin debt, US dollar, weakness? What do you think is going to drive that?
I would normally say, let's look at bond yields, look at US dollars, because that's what global flows would do.
Yeah.
But for me, actually, the key is what do these Chinese households do? They sit on this 20 trillion US dollar cash pile, right? Of which 6 trillion, we just said, might be something they would be willing maybe to put into markets. So we're trying to see what they do. That's very difficult to see, but it is margin trading. It's mutual fund openings. It's these sort of things that I'd like to look at as well to see what are they doing. And for them, A is still more expensive than H, so it makes sense to go to H. But at some point in time, they might say, well, maybe I should buy A. If you live in Chengdu or something like that, it doesn't matter. You can go to your broker, you buy a mutual fund in either of these two markets. So I'd like to see what they do. So that's account openings, liquidity, what happens with their cash pile, and these sort of things.
And I know you guys watch mutual funds data closely as well. What are you seeing as far as positioning there?
So the funny thing is, although the Chinese are putting more money into it, global funds are still very slow. So the Asian funds, they've gone overweight on China. They're actually paring back a little bit after the rally. the GEM funds, the global emerging market funds, they're still underweight. But I was in Europe a couple of weeks ago, and there you see growing appetite. More people saying, well, maybe the overall numbers they said are underweight, but we're actually neutral, or we are thinking about being overweight, or something like that. I think in the US it would be very different. That's why a lot of funds are still very underweight.
You mentioned what Chinese households are doing. It kind of fits into this mega trend you've been talking about, Asia buying Asia.
Yes.
Yeah. And China seems to be leading that along with India.
Yes.
Right? What do you see as some of the sectors or maybe parts of this market that are better positioned for this sort of trend?
I think, so Asia buys Asia is trying to get savings from households and put that into the equity market. Instead of, in India, for example, people would buy gold in the past, jewelry, that's the way to save. In the past, it was also property. But getting that into the stock market, because that's good, you can use that productively for companies. China leads the way, India as well. I think this is going to be a very important sort of trend in Asia because we are still very reliant on US dollars for funding. But the US says now publicly, we don't want to be the last, we don't want to give everybody our dollars. Or we don't want to bear the cost of being the reserve currency in the world. It might well be that at some future point in time, in a crisis, the US says, no, we're not going to provide you dollars. This is your problem. This is not our problem anymore. So Asia needs to prepare itself for that. We can't just rely on dollar funding, so we need to mobilize our own savings in the region and invest in the region as well. That's happening in the different countries, some faster, China and India than others, but that's a very important sort of things to do.
Fantastic.
Yeah.
Harold, thank you so much. Asia Buys Asia 2025 there with Harold van der Linde and his
Title
team.
of his new book maybe too.
Yes, exactly.
Yeah?
That will come out. That's next year.
That's next year?
And that's Indonesian history. So,
Yeah.
So I'm not quite sure that's right. Yeah, exactly.
You got to wear the batik as well, right?
I'll wear the batik. They'll do that next
Right?
year.
Okay, that's a problem. Pinky swear. Okay.
Okay.
Harold, fantastic. Thank you so much. Out of HSBC. This is actually interesting. This just actually came out because we were looking for signs of, has reflation started to show up? And, Yvonne and I were talking about this about 2 weeks back. Becky Leo actually pointed this out, right? That the swap spread between the 5 and the 1 year has turned positive. This happened a couple of weeks back. And what effectively means is that the 5-year rate is now above the 1 year rate, which effectively does this map out the path out of deflation? I think this was a chart that I think you brought up.
Did I? I might have. Yes, we look at lots of charts. But yes, I mean, it seems that the market's pricing that in, that this whole anti-involution is going to lead to some sort of reflation out there that is enough for me to, take it out of bonds and put it into equities or, look in other ways to find some more income. So certainly, I think it's going to be a very interesting trend moving forward here as well. We talk about earnings.
Yeah.
I talked about, Hong Kong X, right? I mean, as Harold mentioned, this liquidity side of things is really going to benefit. And maybe we'll start to see that come into the numbers here. But certainly it's going to be a key focus on how they can extend the streak of IPOs, right?
Yeah.
Obviously CATL was a big one, the world's biggest that we saw this year. Are we going to still get those jumbo names in the second half?
Weren't they toying with the idea of, I think, was it reducing the minimum float?
Yes.
I think that was one of the things that they were talking about.
They announced on Friday already.
Consultation, right?
15% to 10% is already what's been announced.
Okay.
If they can, there's now a public consultation where to bring it down to 5%.
Oh, okay.
Which does raise some eyebrows, too, for some people when it comes to liquidity side of things as well. But certainly they're looking at many other ways to really attract more companies to list here, too.
Yep, so that's, if Bonnie Chan's team is listening in, that's maybe a heads up of some of the things that Yvonne might be bringing up later during the interview as well, if you guys are listening. So yeah, lots of other earnings to discuss as well. HKX and I think CanSino also is reporting today. And we'll be speaking with them as well on the back of the earnings report. Yeah, so plenty to discuss as far as that's concerned. And there's actually some cool data that we've showed you. We'll show you that later on what we've observed so far from this earnings season so far. We're in the early innings, but we're getting into the thick of things. This is the China Show. Right, welcome back. You're watching the China Show, something we're tracking very closely, this pivots, this changing of the guard, if you think about it. Indian Prime Minister Narendra Modi is hailing closer ties with China as Foreign Minister Wang Yi wrapped up a 2-day visit amid Trump's tariff threats. The two sides confirming that Modi will meet with Chinese President Xi Jinping later this month in China. Our Chief North Asia correspondent Stephen Engel is here with us to talk us through the significance of all these developments, Steve.
Geopolitical chess going on, obviously, with Trump and Putin meeting, and then Xi Jinping obviously going to now be meeting Narendra Modi at the end of next week or next weekend. The August 31st and September 1st is when the Shanghai Cooperative Organization, or SCO, it's a regional grouping, security grouping that includes India, Russia, China, and many of the Central Asian former Soviet republics. And they meet every year. And the last time Xi and Modi met was in Kazan, Russia, at the SCO. So this would be the first time that they're going to meet. So Wang Yi went there to New Delhi the last couple of days to set the ground rules, if you will, set the tone for that meeting. And China and India have confirmed Modi will make his first trip to China in 7 years to talk about all the different geopolitical issues that are at hand. Keep in mind, India and China, but also Russia as well, are part of the growing bloc called BRICS, but also SCO is being used to kind of coalesce their mutual interests at the time of added pressure from the United States. Keep in mind, India is facing that 50% tariff, 25% reciprocal, an added secondary tariff of 25% for India buying Russian oil. India has all along said, look, we can buy oil from the cheapest supplier as we like. I'm paraphrasing, obviously. So there's a bit of a standoff that is forcing the hand of India to kind of come a little bit closer to China. They've had some differences. They had a border dispute 5 years ago. They're trying to work through that. Also, China is very close with the enemy of India, and that's Pakistan. And guess who's going to Pakistan later today? Wang Yi goes from New Delhi to Afghanistan, to Kabul. There's a trilat, by the way, hosted by the Afghan Taliban. And then he's going to Pakistan after that. So a lot of interesting movements going along here.
You mentioned about the 50% tariffs on India for buying Russian oil. Scott Bessent, the Treasury Secretary, has kind of reiterated this a little bit. What's his take on it now? Yeah, well, he's essentially saying that the Indian conglomerates, for the most part, are engaged in profiteering. Essentially, he claims, Scott Bessent, the Treasury Secretary, that before the 2002 Russian invasion of Afghanistan, India bought about 1% of its oil needs from Russia. Now he says it's upwards of 42%. Remember, there's price caps put on Russian oil. So he's saying essentially the Indians are buying, and the conglomerates, a company like Mukesh Ambani's Reliance Industries has the biggest refinery in Western India. They've been buying Russian oil. So Scott Bessent is alleging that the Indians are buying it cheap and then reselling it to the tune of some $16 billion in profit. So Bessent saying the Indians, not only the government, but through their conglomerates, which have close ties to the Indian government, are profiteering. So that is one of the reasons why they justify adding this extra 25% tariff to 50% tariff. And then that is why the Indians are cozying up a little bit more to the Chinese. If you go back to Kazan, back in October of last year, when Modi and Xi met, this is just an acceleration. They're saying they've had steady improvement in their geopolitical relations, bilateral relations. Okay. It's a lot of info. Yeah. Just a bit of a clarification. It was the 2022 Russian invasion of what did Ukraine. I say? 2002. Oh, yeah, 2022, of course. It seems like a little bit longer. Yeah, it does. Thanks. Okay, all right. Yeah. Steve, thank you. Our Chief North Asia correspondent there on the latest, of course, of these warming ties between China and India. Some other global headlines this morning. A package of security guarantees for Ukraine could take shape as soon as this week, with European leaders looking to leverage President Trump's backing for a plan involving troop deployments. Now, sources say a gathering of European officials focused on a plan to send British and French troops to Ukraine as part of a peace agreement. We're told around 10 countries would be ready to send forces. The Trump administration says it will step up scrutiny of imports of steel, copper, lithium, and other materials from China. It's seeking to enforce a U.S. ban on goods allegedly made with forced labor in the Xinjiang region. Under a 2021 law, the U.S. assumes anything made even partially in Xinjiang is produced with forced labor, but companies may win exemptions if they can present evidence that proves otherwise.
Right, a quick glance at markets, and the story is fairly simple. Equity markets are down. It's not so much a tantrum, but it is getting tame. We're talking about tech. Plenty more ahead. This is Bloomberg. Right, for a look at these markets right now, SICC, that's a Huawei backed, of course, and as you can see, it's a trading debut. We're doing well. Suffice to say, I think the story really is beyond what the first day looks like, and so certainly it's something to watch, but really underscores the pickup in fundraising, and that really brings to mind the HKX and Hong Kong Exchange's earnings that are set to come out today, and certainly more context than that certainly coming through tomorrow as well. Right, this is a big story, has come out, I wouldn't say out of nowhere, but certainly out of nowhere in terms of the price. Massive move up yesterday, and then we had that lower close. Substantial volumes coming through, 11.5%. There's a full write-up, by the way, here on the Bloomberg terminal for you. So volumes are indicating right now, we're looking at easily right now. So we've cleared the 30-day average as far as this is concerned, right? And we're now looking likely at a couple tens of billions, in fact. So we'll show you this graphic in a moment here. But yes, it's busy trading as far as East Buy is concerned.
So valuations have been quite frothy. There has been some speculation about the company's CEO being investigated, but East Buy denied that on their social media accounts. There's a lot going on with that stock in particular. But yes, here's some of the big moves that we're seeing across these markets, and earnings, of course, on tap coming up, listed there on your screen. This is Bloomberg. All right, welcome back to the China Show. A live look out of Wellington here this morning as we count down to that RBZN decision. The Kiwi dollar is doing this here right now, just seconds away, but certainly they are likely to cut according to the market here today.
All but I think one or two have signaled that they are likely to take the cash rate down by 25 in a couple of moments, and certainly we'll find confirmation of that soon. What's going to be more interesting is the guidance really on where they think the cash rate will be in a couple of months' time, right? So will they revise even further that one? And I'm just going to bring up my
James
screens.
McIntyre, our Bloomberg economics economist, thinks that they really have to deliver this further dose of easing. Because it has been a pretty nascent sort of recovery, right? Keep in mind, this is an economy that came out of a recession, of course, just a few months ago. So we're likely to see that cut here today. Here we go. So cash rate at 3%. There you go. So that is a cut by 25 basis points. And that basically was seen by most economists, as we mentioned here as well. They're talking a little bit more about the average overall
yeah, this is the projection now coming through.
For the fourth quarter of the end of this year at 2.71%. So maybe there's further room for cuts. Second quarter 2026, they see the official cash rate at 2.56%. So it seems like they're laying out a pathway of more cuts moving forward. They talk about the scope to lower that official cash rate further if they see inflation pressures ease.
Yeah, I'm comparing what we're looking at here to the previous guidance coming through, and it does look like they are opening up ever so slightly, that they're sneaking in a bit of a dovish tone here, really. Yeah. That obviously is contingent on where inflation goes, but certainly when you look at their inflation forecast, so they now see 4Q inflation at 2.7. There is scope. There we go. That's now gone a redhead on your Bloomberg terminals as well. Annual inflation 3Q3, and then 4Q down to 2.7%. There we go.
You saw the data out of July. It did suggest that maybe you are seeing some upward pressure when it comes to prices as well. But, economists have also cited what they've been seeing is deterioration in the labor market as well. That seems to be gathering momentum. It sounds like what the Fed's dealing with right now, too, this dilemma, which does pose some downside risks to the RBZN. So for James McIntyre and his team, they're saying, they think further cuts, including taking the cash rate below neutral, are a matter of when now, not if.
Okay, the Kiwi dollar on your screens right now, moving perhaps not so much on what was nearly a consensus call on the cut, but perhaps the guidance coming through. Kiwi dollar is down about over 1% over 2 days. And we're looking also, I'm looking at just my Bloomberg screens right now. As I speak, the Kiwi dollar is down against every single one of its peers, with the exception of the South Korean won. But it's across the board weakness coming through right now in the Kiwi dollar here, Yvonne.
Yep. So now they're saying the data on pace of economic recovery to influence the rate cut. So basically what they're forecasting now is a good chance of 2 more 25 basis point rate cuts in the foreseeable future here as well. So there you go. You see the Kiwi that is selling off here today. We're also extending the gains, though, on the equity market.
Yep, the dovish tailwinds coming through and showing up across assets. Kiwi down, yields not on your screens likely should be showing down as well. Equity markets on the way up. Broadly speaking, the picture though across the region, and not that, of course, the New Zealand equity market is a bellwether of the global, the benchmark here in the region. But all that said, it's really the follow-through pressure we're seeing across the tech space, and yeah, some of the very tech-heavy benchmarks are certainly reflecting what the move that we had overnight on the NASDAQ.
Yeah, and there was no news, right? There wasn't any key news. I think I was looking at the FT and they cited some MIT research, of all things, that mentioned something about when it comes to the number of AI investments out there, 95% of organizations are getting zero return from investments in generative AI. So you have to really kind of dig into something like that, which is quite few and far between and quite, I'm
not even sure what to do with that information.
Exactly, right? And so people are saying it's not even that news that really kind of triggered this sell-off. But, then again, it was quite a steep sell-off. When you take a look at the likes of Palantir, NVIDIA, Meta as well. So you're seeing that still reflected in the NASDAQ 100 futures here as well, which already saw one of the biggest sell-offs since Liberation Day.
Yeah, we were waiting for when Palantir was going to give, right? That stock just has gone parabolic, really, in many, many cases. In fact, we had to look at the numbers overnight. So if you woke up and just had a look at the index itself, you'd think it was a broad-based sell-off on the S&P. It was not, capital N, OT. 350 stocks on the S&P actually closed lower, but because of the sort of index heavyweights, NVIDIA, Microsoft, Broadcom, Palantir, and Meta, you add those things together, pretty much sums up what you got as far as the index drag, entire net drag on the S&P was concerned. So good breadth, but certainly the bad concentration risk.
It brings it up to that, right?
Yeah.
Have we been too reliant on these mega cap names to really continue with this rally as well? You take a look at what earnings, though, maybe, yes, there's a lot of individual stories that are going around, but perhaps what's going on broadly speaking with this tech sell-off might actually brush all those earnings stories aside. We're seeing that in some of the tech names here, for at least today. Yeah. But there were some pretty interesting sort of, names. I think Xiaomi certainly is one thing where they were able to show that the growth in the EV sector is helping to offset some of the slowdown you're seeing in smartphone sales. Yeah,
in fact, they're now looking to challenge BYD and Tesla, of course, going into Europe, right? There's that. PopMart with this, but PopMart perhaps selling on the back of what's really been a strong rally too. And Xpeng, of course, will be joining us on shows later in about 30 minutes from now. So, yeah, stay tuned for those interviews coming up. But, yeah, to get a sense of where we are in this rally. So we've taken a look at that. Southbound flows. Hibor is picking up again the last 3 days. Kind of punchy number yesterday. And, of course, the amount of turnover that we've seen in the onshore markets, right? What's the average?
2.6 trillion?
2.6 trillion daily, Monday and Tuesday. That's renminbi, by the way. So, so we've really seen a pickup in trading activity in Greater China. Where does the rally go from here is a key question. Let's put that question to Wendy Liu, Chief China Equity Strategist at JPMorgan. She's here with us on set to help us understand what is going on.
I think the retail sentiment has been picking up. And that's showing up in the turnover numbers, the margin numbers, new account numbers, but it's a little bit more measured than the past rally we've seen last September, October, and then certainly vis-a-vis the past rallies in 2015 and 2007.
So you're comparing this to then now?
This is more like 19 to 21.
Okay. Yeah. Okay. I thought you were drawing parallels to that because that was a vertical up and down.
Right. So the valuation isn't as excessive. I would say that Asia's earnings have held up better. So this year, next year, 15%, 12%, and then MSCI China actually has seen some downward revisions for 2015. Now it's only at 4.7% year-over-year growth, and beginning of the year it was closer to 9%. But next year, consensus is looking at 12%. So I think it's in response to a solid earnings number, and then this rising confidence of the PBOC put on A-shares among the retail, and then also not so great returns from deposit, insurance policy, wealth management product,
government
bonds. Yeah, and the volatility has risen. So I think it's not just retail, but some institutional money that's been shifting allocation, which has happened for some time. And it just caught the retail attention, I think, starting in July. And we're seeing that in the tape. Yeah.
You mentioned the PBOC put. Are you expecting more stimulus to come through, given how weak the numbers that we've seen so far in July?
I think there are definitely a lot of questions being eased, and then when we look at the gap between M1 and M2 growth, I think there is some anticipation that liquidity will be coming through incrementally. There's also the question raised about the fiscal cliff, because fiscal spending from Jan to July has been quite robust, and what is left for the remainder of the year. When we do the numbers, there's around 5 trillion that could yet to be issued in the long-term bonds, and there's about 1.3 that is available without having to go through additional approval through the MPC that's under the existing government debt ceiling. So our macro team's view is that you don't have to use the entire amount of 1.3 to get to the 4.8% GDP growth target that we have for 2025. So it will soften in terms of fiscal spending momentum, but it won't go into a more serious situation.
We've put your bold call on a chart. AH premium, JPMorgan valuation gap may close in 2026 to 2027. What gets us there?
What gets us to parity,
Yeah.
3 things. One, ACE earnings continue to be quite solid. What we found is that when CSI earnings revision is positive, that premium gap closes because people will be buying the cheaper Hong Kong lag.
Okay.
So I think we're seeing that in the 25 numbers. 26, it's really about anti-involution, which is my second point. If anti-involution does come in, it's a bit of a mentality shift that in an ex-growth world, revenue demand is not that strong. So if there are excessive price cuts, it goes right into the earnings, which we're seeing in the results season in EV and home delivery, right, and liquor. But where pricings are better, like home entertainment, things are quite good. Okay, so that's the second point. The third point is continued rise in southbound flow. Where we found that is that southbound, they'll go for upward EPS revision names within the AH pair, and they seek out the thematic place. Okay, so it's a pretty active money. And southbound is now about 28% of the turnover, and they own about 20%, 19-20% of the Connect stakes. And then there's an optionality, which is Hong Kong dollar RMB due circulation scheme. That doesn't have too many stocks in it. I think it's like 24 stocks in it. But if it gets applied at some point in time over the entire Connect program, the cost of buying Hong Kong stocks by the mainland investors will come down because they can buy Hong Kong shares in RMB. And there's 12 brokers that are right now, ready to provide the quote. Yeah. So I think 3 drivers and 1 optionality will probably get us there at 2026 to 2027. Yeah.
Okay.
Quite some runway there.
I think the first time we even talked about in a while of H shares actually having that premium was the ATL, right?
Yes,
when they first listed.
Listing. Yeah. And how they priced that. But it seems like we're seeing it across many sectors as well. What's the best way? Where are we seeing most of that AH share premium narrowing across this market?
It's really the earnings momentum. So we see biotech. And then some of the financials and materials. Yeah.
Okay.
And so I think it's thematic and then earnings momentum, those 2. Yeah. So we're the top performing sectors that we've seen in the year. They tend to do well. So this is healthcare, materials, right? And communication services, but utilities would be more muted. Yeah.
Do banks continue to do well?
Banks, I think it's somewhere in the middle. Non-bank financial will do better because I think even in the offshore market, people will buy insurance and brokers as a proxy for A-share enthusiasm. Yeah, if they can buy A-shares. And then when you look at these turnover numbers, it's definitely positive for brokers. So we've been putting brokers on a short-term buy call about 2.5 weeks ago. Yeah.
Okay.
What do I do with tech? I mean, I'm looking at the sell-off in NVIDIA, and you use these big mega tech names that are selling off here. It seems to be kind of spilling over to the Asia side of things. Is China tech, that whole AI play, is that still intact?
AI is a theme that I think will continue into 2027 because we look at the overall AI capex, it will be robust this year and next year and maybe softening a little bit in terms of year-over-year growth rate in 2027. Within China tech, there are different buckets. There's the global supply chain, there's the hardware, and then people sometimes put in internet broadly under tech, right? Although there are consumer proxies.
That's right.
Where I think things look most certain is really communication services. People are optimizing their purchasing budget. When Japan was going through the adjustment over the 2 decades, at one point people stopped traveling. They just stay at home and play computer games. So these inexpensive home entertainment options, I think they continue to have space to run, and there's not a whole lot of price competition among the majors. And the second one, I think the global supply chain related to AI, they should continue to do well within the China tech. And where there's a bit of a valuation challenge is the domestic import substitution names. But I think onshore tend to hold those names in very high regard.
These are the semiconductor names?
Semiconductor names and etc. The multiples are higher than what you would see in the U.S. market in anticipation of very large revenue growth. Right. And I think the debate is really about the home delivery platforms, where the earnings are going to be. Is it signaling the worst and we could come in? I think there is a possibility that when the results are announced, people get an understanding of where the subsidy is going to be and then make a decision from there. So that's been the drag.
Well, what do you think of the valuations now? Do you think they're fair, given is everything in the price now on these home delivery platforms? Because a lot of these things have been punished substantially.
I think it really depends on the dynamics. Some, can more afford to do the subsidies. Others could be less afford in those positions. And I think it's about what other investment opportunities there are. And I think there's quite a bit of a good selection. And so year to date, the best performing has been biotech, right? Yeah. CXO's done well, biotech, out-licensing deals have done well. And then the recent addition has been materials because anti-involution. So there are a lot of things to pick from, and I think people will be dynamically allocating their portfolio, yeah.
Wendy, great to have you. Wendy Liu there, Chief China Equity Strategist at JPMorgan. We're watching Xpeng shares. They are up about some 5% across this market here right now, of course, on the back of those earnings. So narrowing their losses, solid margins, and then really talking about record sales. So certainly lots to talk to in our next interview with Brian Gu from Xpeng. He's going to be joining us there, the chairman and president, about their earnings outlook and, of course, global expansion plans. This is Bloomberg.
The president has spoken to both leaders about this, and both leaders have expressed a willingness to sit down with each other. And so our national security team will help both countries do that. Ultimately, the president has always said that there are areas of disagreement in this war that will have to be discussed and decided upon by these two countries. And so he wants these two countries to engage in direct diplomacy.
That was White House Press Secretary Caroline Leavitt there, of course, on President Trump's push for this meeting between Vladimir Putin and Volodymyr Zelensky. Now, a package of security guarantees, of course, for Ukraine will certainly will take shape as soon as this week, with European leaders offering troops as parts of a potential peace deal. Now, Ukrainian allies are hoping to strengthen Kyiv's position ahead of any potential meeting, of course, between the two leaders. Let's bring in our news desk editor, Jill Deesis, to help us understand where we are really as far as the security guarantees are concerned and what we know about what might be proposed.
Right, David. Well, I think, obviously everything is still in flux here. And it seems like a lot of things are still being solidified, but what we know so far is, obviously we had this meeting at the White House on Monday with European leaders, Zelensky there. Seemed like there was a lot of good vibes that came out of that meeting. The idea that maybe we could be moving towards some kind of a potential peace deal, although a lot is still uncertain. So what we've heard so far is that on the European side, it's British and French troops could potentially be stationed on the ground in Ukraine to sort of help as any sort of, a part of a peace deal there. I think the U.S.'s involvement in terms of security guarantees is a bit less clear. So at this point, it seems like maybe there's some conversation around the potential for air support from the United States, but we don't know entirely what that is going to look like. It seems like what U.S. President Donald Trump is really focused on at this point is making sure that these continued talks are actually happening. So he's certainly talked, and I think as you heard, his press secretary Caroline Leavitt talk about just now this idea of having a Zelensky-Putin bilateral, maybe within the next couple of weeks is what we've heard. And then after that, potentially a trilateral summit between Trump, Zelensky, and Putin. Obviously, all of these things are still very in flux, but it does indicate at least a level of progress that really didn't exist a couple of weeks ago.
Yeah, so and he's urging for flexibility. What would that mean? What do you think he meant by that?
I mean, Yvonne, when it comes to Trump, I think, it's always really kind of difficult to interpret that a little bit. What we do know is that, Trump has been open to this idea in just even within the last couple of weeks about territorial concessions on Ukraine's part, right? So I think, Putin has made it clear that, he is interested in obtaining territory, including the eastern Donbas region of Ukraine, right? Obviously, Zelensky has, pushed back against that idea of those concessions being part of any peace deal, and that's really kind of what's led us to the situation right now. I think, on Trump's part, certainly in recent days, he's talked about the need to potentially cede some territory. He's also focused on Crimea, which, of course, Russia went into back in 2014. And the other thing that Trump has really focused on is this idea of, Ukraine essentially having to give up the idea of NATO membership. Again, I think, we've discussed this on the program in recent days, but still a little bit difficult for me to square, though, this idea of Ukraine not being a member of NATO with this idea of Ukraine potentially receiving some kind of NATO-esque guarantees, which has been discussed in recent days. So I think, all of that really does kind of show you that, Trump says flexibility. I think that it still is kind of what's leading to this lack of clarity over what exactly this peace deal looks like. But again, the fact that these conversations are already are certainly happening, that meeting at the White House was certainly a lot more positive for Europe and Ukraine than Zelensky's earlier visits to the White House earlier this year. So maybe that does indicate some level of forward direction. But as always with a lot of these kinds of things, it's really tough to say. And, things can certainly change very rapidly. So we'll have to see whether we do get those bilateral, trilateral meetings in the coming weeks.
All right. We'll see if, wearing a suit and filling up the charm works in some ways as well. Jill Deese is our news desk editor, joining us with the latest when it comes to, of course, a potential meeting between Putin and Zelensky. We got plenty more ahead. This is Bloomberg. Just want to check when it comes to some of these New Zealand assets here this morning after what seemed to be a pretty dovish statement coming through from the RBNZ. So they did cut that official cash rate here and did also mention the possibility, a good chance, as they say, of bringing that cash rate to about 3%, or I should say 2.56% in the second quarter of 2026. So another 25 basis points cuts could be in the offing there. Certainly that's why we're seeing this sort of dovish sort of risk-on sort of feeling that you're seeing in stocks here right now. So we're up some 1%. The Kiwi, though, has broken out of that trading range that we've seen of late. So we're now weakening some 1% or more on that dovish statement. And basically, when it comes to the yield curve, we're basically talking about yields heading lower across the curve here. So 10 basis point move or so on the New Zealand 10-year. The 2-year is also on the move too, Dave. Yeah, classic adjustment there to the new reality, new information that we have. We'll certainly get more details on that. And certainly one other market that's benefiting from that is also Australia, which is sort of similar index constituency. One stock we're tracking about an hour into the session here in Hong Kong is East Buy. As you can see,
Massive rally in the stock yesterday, and then it collapsed into the close. Earnings are out on Friday. We're up 10%. Have a look at the volumes right now. So obviously very, very heavy, number one. Point number two is compared to what we had yesterday, though, it doesn't seem we're extrapolated to take out an enormous amount of trading that took place yesterday. In fact, that's where we are currently. This is where we ended up yesterday, right? So current trajectory is already quite substantial based on current compared to averages, but it doesn't seem we will take that out. Obviously, we'll track it very closely throughout the course of the session. Yvonne.
All right, we're checking Xpeng shares. They continue to edge higher here this morning, and this was one of the standouts when it comes to the earnings picture here as well. Well, we're checking liquor stocks first. One thing to watch very closely when it comes to the liquor side of things is I think Liangye is set to report as well. Profit there to stay flat on the back of some of these curves as well. But Xpeng, the EV sector, very much in focus. Brian Gu coming up.
Where was the react?
11:29 a.m. in Tokyo. Japanese markets are heading to lunch break in just a moment. Of course, we're still tracking the sort of tech sell-off that seems to be really hurting Japan here this morning. We're down about 1.5% on the Nikkei as well. Topics is already falling some fall of 0.5%. The yen's not doing too much. We're hovering on those 147 levels as well. And obviously, we've been tracking, of course, what happens with SoftBank, right? So they are sort of being dragged down from this tech sell-off and falling for a second day. There's been also concerns over this investment in Intel, that continues to weigh in the company. So it's the stock, SoftBank, down some 7%.
Okay, right. As we look across the region, yeah, I mean, certainly tech is the main pain point across these markets. And certainly the bigger you're waiting on tech, the bigger the drag you're going to see, the bigger the decline we're seeing percentage-wise. All things equal, we're down about 0.8%. There are some bright spots, though. So we talk about consumer staples, right? Within that, we talked about it. Liquor makers in China are doing well. That's a big constituency as far as that's concerned. Financials are doing well. That's an Aussie story when you look at the banks traded in Sydney. Apart from that, yes, you have property for one, but everything else, and as you can see, IT is down about 2% in terms of sector movers there as well. Right. Now, as far as these earnings are coming through, Xpeng's actually, when you look at shares right now, we're doing quite well.
Yeah, against the grain, really, of what you're seeing against the sell-off that we're seeing in Asia, right? So we're up some 6%. The Chinese EV maker did narrow its second quarter losses by 63% year on year, but also gave third quarter revenue guidance that missed analyst estimates. But then again, you talk about solid margins, record sales alike. There's plenty of good news there around that company. Perhaps that's why we are seeing the price action here today. Joining us exclusively now is Brian Gu, Vice Chairman and President at Xpeng. Brian, always great to have you here. The market seems to be cheering some of these numbers here right now, and really particularly when it comes to the narrowing of your losses. Can you tell us, what stood out to you, and do you think that you're now on track to break even in the fourth quarter?
Yeah, very happy to be back on the show. Yes, we actually very pleased to announce the second quarter results yesterday, which actually set a record on a number of key operating matrices for the company. We hit historical records on quarterly delivery, quarterly revenue, gross profit margin, as well as our overall cash on hand has also hit a historical record. Also, the growth is not just from China. We saw over 200% growth outside of China as well. And for the third quarter, we have provided a guidance again, will more than double from the year ago levels. So I think things are moving pretty well. And also it's consistent with our view early in the year that we're entering into a super product cycle that will drive further growth.
Understood. I want to ask you actually about the product cycle and whether or not you see that shortening. But before I get to that, though, Brian, the expansion in your gross margins, that's something that I noticed. Could you talk to us a little bit more about why we did see that expansion there? And do you expect that to continue moving forward, Brian?
Well, I think the expansion gross profit margin is a result of a number of factors. First of all, we have a better product mix. The second quarter, we have launched the facelift of G6, G9, as well as the X9. Those are high profit margin products. So with their product mix, it's increasing our profit margin overall. So for the next 2 quarters, we're actually aiming to launch also new products in the more premium segment. The G7 was launched last month, and then next week we'll be launching the P7. who's actually behind me in the showroom, that also is going to be a premium product. So all of them will drive better margins. And on top of the product mix, you also see significant scale component and factors coming in with our better scale, better control of the supply chain management. We're also seeing cost reduction measures coming into play. And then the contribution from overseas market, which is always a higher profit margin component of our business. All of those factors kick in. I think we'll see continued improvement of our margin profile into the next 2 quarters.
Brian, there's a lot going on in your industry, obviously, with anti-involution and from the top down, the sort of guidance for private companies like yourself to maybe end this competition that you're seeing in the EV space. You add that to subsidy programs that might be phasing out in the second half of this year. And then you have Tesla just a few days ago announcing this new product that is pricing at the same range as some of the local players in China. Have you seen signs that this price war and the competition actually easing in your industry?
Well, I think all these factors you mentioned are really important driving factors for our industry at the moment. Let me just take one at a time. If you talk about anti-involution, I think it's something that I think the Chinese government has decided that it's time to bring in some of the competitive measures that's being used by some of the players in the industry that really focus on pushing the volume and also focus on really squeezing the partners. But on the other hand, I think it does not take away government's effort to encourage long-term innovation, focus on quality and building a better ecosystem. I think that's exactly what I think Xpeng stands for. We stand for innovation. We stand for quality. We actually are the ones probably going to benefit from this new measure, renewed focus on industry. And I think, the change in the landscape, you mentioned some of the subsidy, also some of the advantages that will probably start to go away by the end of this year or the early next year. I think it will be an industry-wide phenomenon, may cause short-term blips. But we saw, a year or 2 years ago when the Chinese state subsidies for consumer level EV buying, when it's phased out, it did not really necessarily, dampen the long-term growth prospect of the business. So I think it's actually healthy. And I think the Chinese government probably is also want to make sure that any measures does not put shocks into our consumption patterns in our industry. And in the long run, I think, the industry, I would say, will be, focused more and more on innovation, on quality, and also building a business that has a global footprint. All of those are strategies we're pursuing at the moment.
And Brian, has this, and the answer could likely be no, has this affected the way you look at pricing strategy at all?
Well, I think we have always focused on providing product that has innovative and differentiated technology, so we price accordingly. So, for example, our Mona here, it was actually competing in the 150,000 RMB and below segment. It's not necessarily the cheapest product. In fact, it's actually 10,000 or 20,000 RMB more expensive than the comparable size product because it has the best technology, because it has the most advanced autonomous driving or ADAS functions in the class, in that class. It's selling very well. It's actually one of the product leaders in that category. That is kind of I think competition we're focused on is providing superior product and technology rather than focus purely on price.
I was going to ask you about Mona because the Mona MO3, seems to be one of the biggest contributors to your sales. I believe it accounted for a third of your sales. So it's really, your volume growth was driven by this one model. Is there any sort of risk of, being too concentrated or too reliant on just one model alone?
Well, I think Mona is the first indication of what we call, the next product cycle. I think you will see we're launching our new P7 next week. We also have successful launches of P7 Plus after Mona last year. We actually have multiple products, I think, that we believe will be able to drive volume. And more importantly, those are actually higher price and higher margin products. So I think, going to next year, we actually are not only launching the P7, as I mentioned, but also we are going to be offering a slew of dual powertrain module, for example, the super electric models for our existing pipeline. So all of those, I think, will contribute a very meaningful volume drive. So I think Mona will be a very important, I would say, bedrock for our overall volume, but you can see that higher margin and better products also coming and will continue to add to our volume momentum.
Yeah, and Brian, I'm looking at the guidance you guys just put through as well. So in terms of deliveries for this current quarter, I believe it's about, let's call it 150% increase year on year. Revenues, let's call it about 100% increase year over year. If I follow the dots, when do I get to profitability overall for the business?
Well, we have told the street long ago that we are focused on reaching a quarterly profitability by the end of this year. So we're still maintaining that guidance. We think very confident, actually, in fourth quarter we'll be hitting our profitability mark as a whole.
Okay, I was going to ask you about global expansion as well. You just set up a production in Indonesia. Yeah. What's your plan now for other markets like Europe?
Well, I think as the company has global ambition, also want to be a global leader in international regions, you have to think about local capabilities. Indonesian plant is the first step. We actually were happy to deliver our locally made X9 to our customers in Indonesia just last month. We will be increasing that pace. We think that we need local strategies for Europe, for other markets in Southeast Asia, and perhaps in Latin America as well. So we will do it step by step. But the overall global expansion is very important and core strategy to us. And we see that not only it's a volume contributor, but I think on a profitability basis and also for future product categories, I think global presence is very important to us.
We were also just talking about another Chinese company, Xiaomi, who's basically declared that they're going to be entering into the European market in 2027 and really kind of competing the likes of Tesla, BYD, and Xpeng as well, Brian. I'm just wondering, what does that mean overall for overall your competition, the companies that you're seeing abroad?
Well, I think it's we really welcome our friends and partners to really focus on the same category and offering the good product to customers. At the same time, I think we think that the automotive and EV market is big enough. It's not a winner-takes-all market. We think that there's plenty of room for others to compete in. And also, we're taking shares from a lot of legacy OEMs. I think that this wave of change or conversion is what we're focused on. So driving a bigger pie, accelerate that catalyst for change, for conversion, is what we focus on.
Brian, I think a few days ago, you guys filed with the HKX this expanded collab with VW. Could you just help us understand what that exercise is about and where that fits into the broader strategy? What do you want to see from that specifically?
It is actually the fourth strategic partnership agreement we have entered into with VW. This one actually is very interesting and very important because that expands our collaboration on electric and electronic architecture agreement to more than EV. So now the ICEs, also PHEVs in China for Volkswagen will start adopting the same electric platform that's using our technology. So I think, first of all, it expands our scope of collaboration immensely because, as you know, PHEVs are the bigger segments for Volkswagen products than the EVs. At the same time, I think that also allows us to more, share more synergies from existing agreements so we can actually have a better, more efficient product and also collaboration that will drive the business for both sides. So I think you will see meaningful contributions of this agreement starting in next year, and that will also be lasting for many, many years.
I was looking at your take on regulations as well. I mean, there's been some scrutiny around advanced driver assistance technology, and certainly, does that in any way impact your technology development at Xpeng? And how do you see the whole regulatory environment evolving over time?
Well, one of the things I think we saw on the consumer side is that people are embracing the advanced driving technology on their vehicles. So it's a trend. I think it's not stopping. We see that continuously improve, increase, this year. But at the same time, I think that they also are players. I think because the way that they trying to market and over market some of their products and has caused problems. I think that what the government is trying to rein in is to standardize and also to control the some of the practices that overpromise technology. But I think overall, it's actually going to be healthier for the overall development for this industry, because I think that long term, I would say drivers want to feel comfortable and also safe inside these vehicles with these technologies, and then with these improved monitoring and also improved, standards, I think that you will get more penetration acceptance from drivers and customers to embrace this technology. So I think that long term, it's going to be, I would say, beneficial to the development.
Brian, as always, thank you for taking the time to speak with us. I think we covered a lot of things. We're looking forward to hearing more updates from the company. Brian Gu, their Vice Chair and President at Xpeng out of Guangzhou. And for Bloomberg subscribers, by the way, you can check out that interview. If you didn't catch it live, you can scroll back on TV Go and catch parts of the interview or the whole thing. If you missed in its entirety, and of course, check out other functions that you may have missed here on our show. Check it out, TV Go. This is Bloomberg. Right, welcome back. So in about 30 minutes, we're going to get the latest iteration of Hibor, and certainly following the massive move up, relatively speaking, of course, let's call it last 4 days. That's taken us from, let's call it 0.5% to now about 2.5%. Where do we go next? Does this continue to move higher? What's the ceiling? Do we retest some of the highs that we had earlier this year? Because that's a nightmare if you have a mortgage out right now. It's been good, though, for the last few months or so. Let's get a sense of things here. Stephen Chu, our Bloomberg Intelligence Chief, Asia FX and Rates Strategist, is with us. Do you think we'll get another pop today?
Yeah, slightly higher, because I'm sure everybody in the market will tell you, like, when will Hibor surge? It's a matter of time. Everybody said that. And at the beginning of the year, we assumed that the Fed will cut rates by 50 basis points. And even with that, the fair values for 1 month and 3 month Hibors is around 3%. So it's a matter of time that we get 3%. Now we are 2.5%. So we are very close to that ceiling. And usually there's an indicator. When will this stop? Is when the 1 month and the 3 month invert. Now it's still like positively stopped upwards, but we are very close. Once the 1 month is a lot higher than 3 months, then we go back to 7.75, and we get the other way around in terms of intervention.
Does it matter what the Fed does, if they cut or not?
Unless they cut 100, 200. But I think they're going to stay put for now. So it's the same story. The problem it's not a problem, it's an observation. It's very rare that we see the US dollar and US rates go in different directions because of what happened with the trade war in Trump, which is why we're seeing so frequent, firstly in May, 7.75, more recently 7.85. Intervention in both ends. It's very rare.
Well, so at what point will rate differentials matter then, given the small steps that the Fed is likely to take, if at all, of course?
I think the fact that we are at 7.85 is because of rate differential. So the carry trade, positive carry trade in the dollar, and now we're going backwards. So once the Hong Kong rates are more in par with the US dollar, then of course we get all the carry trade unwind, and then 7.75 liquidity injection.
Again, here we go.
And then carry trade again, all the way again.
All right.
Yeah. Okay. We'll need to watch what happens there. But what should we expect for honky dollar, though? Are we likely to step away from the weekend of the trading ban for now? Are some of the interventions that we're seeing from the central bank essentially now working?
I think now, obviously, they haven't intervened yesterday, like after last week. Now it's the market unwinding the carry trade. So that will sort of push the honky back to 7.75, and Hibor will rise until they step in at 7.75.
Okay. Stephen Chu, thank you from our Bloomberg Intelligence team there on what to expect out of Hibor coming up. Plenty more ahead. This is Bloomberg.
I think the ultimate driver here is not so much the economy, but it's actually a reallocation of money from households. Chinese are avid savers already, but over COVID they have saved even more than what they normally do. So they're sitting now on $22 trillion of cash. That's the size of a couple of largest global asset managers together. So gradually they're going to invest it. And that explains, I think, the strong southbound flows.
I think the retail sentiment has been picking up, and that's showing up in the turnover numbers, the margin numbers, new account numbers, but it's a little bit more measured than the past rally we've seen last September, October, and then certainly vis-a-vis the past rallies in 2015 and 2007.
So you're comparing this to then now?
This is more like 19 to 21.
Okay.
Yeah.
Okay.
Some of our guests this morning giving their outlook when it comes to markets and this equity rally in China. When it comes to Chinese media as well, they continue to tout this recent rally in stocks here as well. And the front page article of the Securities Times says foreign investors are increasing their holdings of Chinese stocks as optimism rises. And it says more than 70 companies have qualified foreign institutional investors among their top 10 shareholders, with combined holdings of, get this, $947 million. And the report says the sectors they favor include likes of auto, pharma, and F&B.
Yeah, and I think once you get down that list, and that list that Yvonne just mentioned is getting longer and longer, right? We have a fantastic piece right now that looks at a broader base in the rally taking place, a broader participation, whether that's the number of stocks at 52-week highs, advances over decliners, effectively the number of margin trading, for example, and that's going to be on the Bloomberg terminal. You can check this out as well. In terms of a function you can check on this, it's WEIB actually takes you to that as well. There's the plug. There's the plug for you. Okay, good charts as well to follow that. Okay, now as far as the story here and now is concerned, it's really this tech drag, right? So Alibaba, Tencent are just falling in tandem with what we've seen globally from peers.
Yeah, so we're seeing some of those falter here in the face of what we saw with NVIDIA, Palantir overnight as well. Mart, that's an interesting story, right?
It's turned around now.
It's turned around. It was initially lower. There was some concerns of what, this whole longer-term popularity of Labubus and the like. So despite coming out with some pretty robust numbers with revenue and profit growth, that earnings call is happening this hour. Perhaps maybe we're hearing something from there. We'll hear a bit more. But revenue basically increased 204% from a year ago as well. So still high uncertainties, according to Morningstar, when it comes to the long-term popularity of Labubus.
Okay, well, so it looks like we'll have to...
Can they outlast Hello Kitty,
Well, Hello Kitty's still around, right?
Yeah, it's been there for decades.
Who's the cousin? Is it Karopi?
Karopi. There's also Cinema Roll. There's a lot of friends now.
Care Bears. There was the Smurfs. There was... What other toys are we looking at here? Anyway... Barbie. RBZN's coming up later on. Check that out. This
Top of the hour.
is Bloomberg.